Question from Ari is asking, what do you recommend to go full-time from, to go from part-time to full-time trading? First thing first, Ari, we have an episode. It's interview 118 with it's another Paul, but exactly on that topic. I don't know, Paul, if you have a suggestion on how to go from part-time to full-time in trading. Anything you want to add to that?
I think the thing is, what I would say now, and this is what I was saying to a lot of people that are in my group. I've got this turtle group, and these people are professional people in their own right. We've got a guy who's, I think, a physicist. We've got people who've got companies. In a way, you can be a professional trader, but you don't actually have to give up the day job if you don't want to, because you can run the whole thing on EAs with a VPS. I have VPSs, which I think they charge me something like $35 a month for each one or something like this. I mean, the prices have come down dramatically. So the setup costs are quite low. So if you have a job, why would you want to put the pressure on yourself immediately? What I would do is get some trading systems which work, get them coded up, work out, in that coding process, work out whether that's really your time frame or not. Because sometimes you have to sort of spend money to work out whether something really isn't for you. It might be that you are really a longer term trader rather than a half an hour, 15-minute time frame trader. Work that out, get something which is working, and then at that point you could make a decision to perhaps even do what I'm suggesting, is that you get your trading slips, you present that to a trading house, or there's a lot of websites out there where they call their fund seeders. You can present your slips there, and you can get money seeded to you via intermediaries, and you can sit underneath companies who do the regulation as well. So you don't even have to worry about that as well. So it could all be very, very smooth and seamless, as opposed to jumping out of a frying pan into a fire and putting the pressure on yourself, thinking, I got to make tonight the money to pay the rent and stuff like that. That's where it all goes wrong. That's in my opinion. You put the pressure on, it won't work. But if you take it slowly and you have an objective to actually manage money for other people, even if you're trading an account of $5,000, it doesn't matter. If you can put that account up 30% a year for 3-4 years, you're going to get money. You won't get a lot of money to begin with, but just bearing in mind that the average hedge fund traders, there's a lot of hedge funds going out of business. The best hedge fund traders make about 30% a year. Okay, they're dealing in billions, and then they get 20% of the profit. I mean, this is the whole point. As I come back to my first argument, you don't need to 300% your account. For example, my EAs, I target between 5 and 8% a year. That's all I need. And then if you've got money, the guys give you the money, and then you get 2% management fee, 1% management fee, plus 20% of the profits. You can make a nice living. So that is much easier, and the connections are out there to get hold of these people, the fund seeders and everything. There's a lot of people with a lot of money out there, and they're all looking for a home, and they don't know where to look. Actually, that's the other thing. That's what Forex, it's what people don't realize. They don't realize there is the money out there, is this gigantic sums of money out there, and none of it's earning any money on the bank because of the worldwide global interest rates are just pitiful, less than pitiful. Therefore, if you can give someone 5% a year with no drawdown, then you basically, you're king. And it is possible. It is most definitely possible to do it that way. So I would advise to do that. Probably keep the day job, keep paying the rent with the day job, and just do it at night time. Set your EAs up. You don't want to code it yourself. Just get someone cheap. There's plenty of people out there who want to do good coders and things, and then you can build your own little business that way and move it on like that. That's what I would say anyway.
I love this perspective. It's awesome. I think it's also the way I'm going over time. So love it for sure.
Yeah.
Great.
Cool.
So we have a couple of questions that we have covered in the past, things like money management, things like FIB, pivot point. I think that's pretty much the same thing we've talked about. Is it possible to trade with a small $100 account, or should we have a big account?
$100, yeah. You can trade with any size account. I mean, again, if you only have $100, that doesn't really make any difference. If the objective is to produce some trading slips to show to a third party with view to them, funding you and feeding you like a fund feeder for management, then it doesn't matter. What people are looking for is drawdown. The thing that investors they hate is drawdown. You imagine, you just put yourself in a position. Imagine you've got a massive company, you sold your company, you've been very successful, and you've got for your family and you, and for your children and your grandchildren or whatever, you've got $100 million. Let's say $100 million, a lot of money. Let's say $100 million to play with. Now, what you want to do then, because you sold all your business, you got to live off the interest, you got to live off something. At that point, you are dead scared that someone's going to lose you your $100 million. So if you give someone the $100 million to trade and they draw down to $50 million, you're going to have a heart attack, because that is your nest egg. That's your whole life that you've worked for. That's the future for your children or grandchildren or whatever it is. So, you might be prepared to say take 5-10% drawdown to 90 million, for example. You start off with 100 million. Let's say 10% drawdown. Is that? Still got 90 left. So it's not too bad. So you've got to think like an investor. They don't want to have 50% drawdowns. They love a 10% drawdown. They love zero drawdown, but it's not possible because it's financial markets and you can't win 100% of the time. So think about that. But if you could have an account, if it's $100, $1,000, $10,000, $100,000, and you can draw it down, say maximum 10, 12% only, then you're in business, because that's what they're looking for. If you give them, say, 6% a year with a 12% drawdown, they'll much prefer that than give them 20% a year with a 50% drawdown. Because when they draw down 50, the phone will ring and the guy will ring up and say, liquidate everything because I want my money back. Do you see what I'm saying? There's this relationship between the drawdown and the profit. And actually, if they've got a lot of money, all they want to do is preserve that capital. They just want to grow it a little bit. And they say to their friends, I got this guy, he grows my capital 5% per year. No drawdown, nearly no drawdown. And they love it. That's how the big money thinks. And so I would even ignore the size of your account. Just trade as if you've got 100 million and you've got to protect that 100 million, and you're protecting it, with your every single power and sinew you've got in your body to protect that, in order to make sure that account is still there for tomorrow. And you can present that to someone and say, look, I've got some cracking trading slips here. Will you sponsor me to trade some money? And that's the way to go, in my opinion.